Let's get out to Kevin Green now, a senior markets correspondent, because of course we've had some data this morning. We've had PPI, we've had retail sales, we've had ADP, a new, of course, data set that we are dealing with. But just as we hit the 10 o'clock hour, we've got new information hitting the tape. We've got business inventories, consumer confidence, pending home sales. Pick your adventure, KG. What are you seeing out there?
Yeah, a lot of data. I mean, 2 weeks ago, we were kind of begging for this data, and today we have way too much of it, it seems like, Sam. We are looking at pending home sales actually coming in a lot better than the Street's expectations, coming in at 1.9% for the month of October. Street was looking for around an increase of 0.5% on a month-over-month basis, and previously that was actually revised higher to 0.1%. So a really strong number when it comes to pending home sales. We've talked about the mortgage rates kind of moving to the downside here. Prices also kind of leveling out. We had some pricing data early on today that also signified that, and maybe some buyers are now stepping out off the sidelines trying to get into these markets. What's also very interesting about the home market in general, you're starting to see a significant amount of cancellations as well from these buyers. Now, that doesn't mean that they're not buying homes, but it just means that there's a lot that they can choose from, and that's a signal that inventory is actually increasing here. We had the Richmond Fed number also coming out that came in at -15. Street was looking for -5 when it comes to the Richmond Fed, and I think the other focus area that we've been kind of talking about has been the retail sales number. I would say for the most part, it's actually mixed to probably a little bit better when it comes to setting up the rate cut expectations. If you're looking at the month-over-month print, now this is for September for headline retail sales, that came in at a growth of 0.2%. Street was looking for 0.4%, so missing the Street's expectations there. But if you're looking at the retail control group, that's going to be a very big component, something that we don't talk about that much. Think about that as like the core PCE number of retail sales, if you will. That actually came in at -0.1% on a month-over-month basis. And the reason why I'm highlighting that is that's going to have a direct impact not only for PCE prices as well as the GDP as well. So we probably will see a revision to the downside from the Atlanta Fed GDP Now forecast, which could lead a little bit more confidence for some of these members that are on the fence about a 25 basis point rate cut in December. So a lot of data for today. We're obviously digesting this as well as other news items here, and that's why we are seeing a lot of gyration in the market, especially if you're looking at the S&P 500.
Yeah, I mean, a lot of information, as you say, a lot of data to chew on this morning. Of course, some of it backwards looking, a little bit stale, but it's very important as far as confirming the trend that we've been seeing, and particularly as it feeds into the Fed's calculus come that December rate cut. I mean, the odds have jumped to about 80%, and no doubt this has been helped by some of the dovish commentary coming from the likes of Daly, Waller, Williams. We've had Besson out this morning making some very interesting comments about how he thinks that the Fed should be fading into the background a little bit more and calm things down and work for the people. So make what you want of those comments. But what do you make of the reaction in the markets today? I mean, the 10-year coming off, and so is the dollar. And obviously, we are tracking what's going on in equities as well. A little bit of a softer picture than we saw yesterday. What's your read on it all?
Yeah, so what I would focus on here for the S&P 500, I think looking at the Nvidia story, and it's really important right now, if we could actually bring up a 1-minute chart of S&P 500, a very interesting development taking place. Nvidia is now below that 170 level. That has been a key area of support that we've been looking at since September of this year. So you are seeing aggressive selling taking place. Nvidia is down about 7%, and the S&P 500 just dropped about 30 points or so from this 60, about 30 points or so. So a lot of volatility that's actually taking place holistically for the market. Keep your eye out on volatility. Volatility is edging up here a tad bit. Now we're sitting at around 21.27. And from a technical standpoint, Sam, we did have a nice rally yesterday. We saw a broad-based participation, but unfortunately, we did also stop a little bit short from that 50-day moving average for the S&P, a very key area for technicians that are out there. And if we fail that today and we see a pullback to the downside, that could give bears a little bit more confidence that they can knock this market down, given the events that we have, this rotation between TPUs and GPUs and maybe concerns about demand in the future. That's really what's being priced in right now in this market.
Yeah, absolutely, particularly off the back of Meta using the Google AI chips. That seems to be what is weighing on Nvidia right now. No doubt, obviously, we saw yesterday Google charging ahead and really powering the NASDAQ to its best day since May. And a lot of the conversation had been really centered around whether leadership is changing, you know, as far as Alphabet now as, you know, it was catching a bid in the face of a little bit of softness in Nvidia, which is interesting. And we're seeing the same sort of scenario playing out this morning. I just want to get your take on what you're seeing across the commodities space this morning as well, KG. I did mention that drop in oil that we've seen. We're tracking some reports now, maybe, according to some media outlets, Ukraine agreeing to terms of a peace deal. What are you seeing? What's the impact on the commodity space?
Yeah, so you are seeing oil actually selling off here, trading at around $57.20. We've seen buyers coming in and stepping in around this current level. So let's see if that actually does occur here today. There are early reports that Ukraine has agreed to a peace deal that has been revised from the original one that the U.S. has actually proposed. So I think that's a very key thing for us to really note. In the revision, one of the revisions is actually removing the cap of the amount of troops that Ukraine can have within its military. And that could actually be a sticking point for the Russians. But for right now, the market's pricing in that Ukraine is going to sign this deal. Now the ball is really in Russia's court. Are they also going to agree with this? This is one of the bigger sticking points between these negotiations over the last 6 months or so. And maybe this is going to be the time where it gets over the finish line. We are seeing oil move to the downside. Obviously, reducing sanctions could also bring in additional supply into the market, especially when you're looking at heavy sour crude oil. So that could actually have an impact on the Brent oil markets as well. And then there's also a concern about current supplies in the market. So we are seeing a pullback. 56.55 is kind of your line in the sand here. We have seen that as an area of support back in April. Again, once back in May. We're getting towards that level right now. Let's see if some buyers stepping in, if they will step in. Nat gas also seeing an aggressive sell-off here. This is seasonal in nature. It kind of got a little bit ahead of itself, but we are also seeing maybe the fact that Russia could export natural gas to European countries again, and the need for liquefied natural gas, which has seen a significant increase when it comes to demand, could be waning as well. Those liquefied natural gas names are also selling off. Venture Global, Cheniere, things of that nature here. So the natural gas chart here is kind of showing a little bit of a topping pattern. MACD has now crossed, and you are seeing maybe a little bit of an extension here. A pullback, an aggressive pullback is not out of the cards. Natural gas is probably one of the more volatile commodities out there that we trade on a daily basis.
Okay, a good look at the commodity space there this morning and the data and the technology headlines. Thank you so much for that, KG. I'll speak to you a little bit later on.